Hello and welcome to this May 3rd, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we are doing something a little different, taking a look at the Russell 2000 3-year weekly chart. I actually had written an article a couple of weeks ago at StockCharts.com. If you look at the Chart Watchers newsletter and look at the last article, you'll see that I had talked about the financials and the fact that it looked like the financials were topping. They just began to underperform on a relative basis, and that has not been a good sign for the market, because as the market has gone higher in the past, it has generally coincided with an outperforming financial group, not an underperforming group. So that was a little bit of a warning sign that suggested the financials could be topping. But when I looked at the overall major indices, the Russell 2000, the NASDAQ, the Dow, S&P, and so forth, they all still looked okay, still in an uptrend. What we were looking for was perhaps a high volume type of reversing candle on the two leading indices, which were the Russell 2000 and the NASDAQ. So today, for the chart of the day, I'm featuring the Russell 2000 to just show you that last week was not a particularly good week in terms of the way the candlestick set up. You can see here we put in a dark cloud cover candle on the Russell 2000. The NASDAQ actually printed a bearish engulfing candlestick. But take a look at where the reversal occurred. If we go back and take a look at the last 3 years, you can see that the Russell 2000 back at the end of 2007, when the market was topping, we started to roll over. We had some support down around the 750 area, and then we broke below that at the end of 2007, and then throughout the first 2/3 of 2008, we were in a trading range between 650 and 750, and we came up and we tested this 750 area on multiple occasions, probably 4, 5, 6 different weeks during 2008. We battled to try to get through 750, and we couldn't do it. The weakness that we saw at the end of 2008 all started from 750 on the Russell 2000, collapsing down to half of that by November at 375 before finally bouncing and then finding our ultimate low in March of 2009. But notice that this major selling began at 750. So now we've bottomed off the March lows at below 350. We've recovered all the way back up, and we've recovered back almost to that 750 level. Last week's high, 745.95. Before putting in this reversing candle, finishing very weak at the end of the week. Friday was a horrible day across the indices, especially the more aggressive NASDAQ and Russell 2000. That was not a good sign. But also take a look at how overbought we were on this move to the upside. The weekly charts, now this is bad for even the daily charts to get to an RSI up in the 70s and close to 80, but it's very rare to see a weekly chart get this overbought. So I don't know that I would look at this as being bearish for the market overall, but I do think that this is time to be cautious, because as you can see, this trading range that developed back in 2008, it wouldn't be unusual to see a similar trading range develop here on the right side. Maybe a couple trips back to 650 and then to 750. And this could coincide with just some general weakness over the summertime months. So that's something to keep in mind. The other thing that I think will be worth watching, off of the bottom in March of 2009, the weakness that we've seen, generally, we have seen support at the 20-week moving average. That's where we've been bouncing. The 20-week right now on the Russell 2000 is at 662. That's 54 points below where we finished Friday, which would be about another 8% from where we closed Friday. So don't be surprised if we see some additional weakness over the coming weeks and maybe into the summertime. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.